Alright guys, welcome back. It's LSP. It's currently the 3rd of July 2019, 11:18 a.m. GMT time. So I want to go over the dollar index and just show you a couple of things, which should help, with your sort of directional bias. Okay, this video is going to be available to everybody, but if you want to be involved in the trading community that I'm building over at Patreon, then the link's on the screen. Very much appreciate anybody who sort of joins that trading community. I will be doing live sessions during the London session. Those sessions will not be recorded because I want to protect those who are pledging, and be fair to everybody involved, and to make sure that they are getting the best value out of what I'm going to be sharing. So those live sessions will be forthcoming very, very soon. I will be using Zoom to allow those who are going to be involved, to communicate with me and to show things on the charts and to chat and ask questions and everything else. And there will be lengthy sessions. There'll be lots of questions and answers and and so on. So that will be forthcoming very soon. So dollar index, okay. We've been back and forth with the dollar index for a while. We've been showing some things, in previous YouTube videos. But in this particular video, what I want to do is I want to show the directional bias idea, for having a longer term view of the market, but then still being able to take, intermittent trades within the monthly and the weekly ranges on the daily and the 4 hour and the hourly. Okay, so when you look at a monthly chart like this, okay, and I don't want to zoom out too much because then it kind of shrinks the chart because this is a futures contract. But when you look at the monthly chart like this, we know there is an inefficiency here, okay, which could potentially be traded into, okay, and we know we have the monthly low down here, which again could potentially be traded to, okay. So for me, these are the two levels, all right. Got 96.80 and 95.35 rounded. So we're pretty much in the middle of that range. So we don't really know which way price should be going. We've got a general idea. We can say, well, price has come from down here all the way up here. So this is just a normal pullback. It's respected the down candle, and now it's starting to sort of grind higher. But the problem is, okay, we've already had a stop run up here. Okay, so this area up here, so this old high, okay, could be one of two things. It could either be a stop run and then a reversal, take out the swing low down here, or it could be a break in structure and then a continuation high, and this is just a normal pullback. We will never really know until it happens, okay? But our job, so to speak, as traders is to kind of deduce which one of these things is going to happen first, okay? So we have a very small inefficiency up here, almost traded fully through, okay? So there's still a little bit left. So again, we are closer to the lower liquidity pool than we are to the swing high up here. So let's drop down to the weekly and take a look at where we're at. Okay, so you can see the inefficiency is still here. I've had a nice little pop up here, decent pullback, small rally, nice progressive move lower. So effectively, if we remove these and we put in, okay, the midpoint of this up candle, okay, 96.58 or 96.50 to 96.60 is an area where I wouldn't want price to go back through. Okay, now this is the monthly low. I'm going to take this off and I'm going to refine this monthly low to here. All right, so 95.15 to 95 big figure is where I would expect price to go if we have some nice price sensitivity at 96.60 and we start to move lower, okay, and the closer we get to this 95.15, the more likely we are to kind of spike through that. The reason I'm picking this low as opposed to this low here is because we're very close to it. So if it does come down and it takes out this swing point here, it's very likely to just take this out as well and probably spike down to 95 big figure. Okay, so that's where we're at with the weekly at the minute. When you look at the daily, let me just zoom out one more. So we look at the daily and we can see, again, tiny inefficiency up here, drop, lower low, oh sorry, lower high, really nice drop. Okay, we came very close to taking out this swing point, didn't do it. So we're at an area now where we can kind of refine and say, well, if this high up here is taken, 97.25 to 97.30-ish, that's the area really where I would expect, and we're talking about a full dollar, but that's the area I would expect. If we do get above this, then we're probably going to continue higher and filling this inefficiency on the monthly chart. Okay, so how do we use this information? What can we do with this information going forward? Well, the dollar index, for me personally, although it's the benchmark, it's something that you can kind of look at to get your sort of directional bias on your foreign currencies. I don't use it that way. I use it as a timing tool, okay, to get into Euro USD mainly. So what I like to see, for example, if price starts to run higher into this 96.60 level, okay, 96.50 to 96.60 level, then I'm going to watch price on Euro to see how it responds around this area, okay, because if it does get up there, it's filling in a very tiny rebalance. It will basically rebalance a very small inefficiency up here, and then I'll be watching on Euro to see whether or not Euro is in a technically and from a rebalancing point of view. I'll look at Euro and see whether it's technically correct the way that everything's forming to potentially take a trade on Euro based on timing the sensitivity here. So if it gets up here, I'll watch price, how it forms. I'll watch price, how it reacts at this level. And if we start to get a movement away from that, I'll know, looking at Euro USD, whether or not Euro USD is poised to go higher at that point. Okay, so I use it as a timing tool. I like to use it as a timing tool. Now, if we drop down to the 4 hour to kind of get a better understanding as to whether or not we're probably going higher or lower. So again, you can see the low down here. Let me zoom in one more. So we're talking here basically. I mean, we're very close. If it does, I mean, it would make sense that it would spike up there, to be honest. And we have this level here. Okay, 96.50. So basically 96.50 to 96.60. This is really the sweet spot. I mean, if it gets up there, I want to see how price reacts there, and get a better feel for whether or not it's going to continue going lower or whether or not it's going to continue going higher. And it could very well go sideways. But this is very refined. If we drop down to the hourly, we may even be able to refine it a little bit more. I mean, you're talking maybe a pip or two refinement just here. And remember, your charts may look slightly different, but yeah, it would make sense. I mean, if you look at price, you've come down, small inefficiency here that would need rebalancing at some point, but it wouldn't need to come down there to rebalance this. So one of two things: when the news release happens this afternoon at 1:30 for the euro, for the dollar index, we could very well come down there or come down here, rebalance, shoot higher, rebalance, and then pretty much go nowhere. Okay, that's one of the scenarios. What I would like to see is I'd like to see a spike up there, clear out all of this inefficiency, potentially come up into, and this is where the refinement comes in, this level up here, which will be 96.65. And remember, look, we're working with, we're working within a 20 pip range basically. So anywhere within this area up here, I'd like to see price shoot up, do its job, which basically will give me what I want to see on cable as well. A nice drop lower, take out the low of the day, put in the low of the week, and then we get a nice reversal and we can take a trade going into Thursday London session. If that happens, great. That's my preferred scenario. I'd like to see that first, and then a reversal, and then continuation lower. But we'll see what happens. We'll see what happens. All right, guys. So I just wanted to get something out there. Make sure I'm putting content out on YouTube as well for those that are, not part of Patreon or the Patreon page. To be fair to everybody as well. So this is this one, and I'll continue to put out, intermittent content, for everybody with relevant information. I'll try and keep it relevant. I don't really want to be talking about things that just aren't relevant. I like to discuss things that are going to help traders in their trading and things to watch, and to be mindful of, going into the remainder of the trading week. All right, guys. So I wish you all the best, and I will speak to you very soon. Take care.